Welcome to Talking Success, the podcast series that focuses on everything FinTech. I'm your host, Darren Franks, and each week I'll be joined by a series of experts in the field who have a wealth of knowledge to share. Whether you're a seasoned operator or simply curious about the world of FinTech, Talking Success is the perfect place to stay up to date on the latest developments in the industry. So sit back, grab a coffee, and let's start Talking Success. Hello, everybody, and welcome to our second episode of the new series in Talking Success, where we're talking about really topical things that are happening across the fintech industry globally. And I'm delighted to have Clayton with me today, Clayton Hayward from UKheshe. I've known Clayton for a number of years. We've had dealings together, and we've been at events, and we've shared a couple of glasses of wine together as well. So it's good to have you here, Clayton. Thanks for joining.
Thanks so much for the invite. Looking forward to the chat.
Yeah, absolutely. So, really informal. Really wanted to have a chat with you about all things relating to UKheshe, obviously, but really talking a little bit broadly or broader about fintech enablers. What that means, There's lots of words in the industry. We've got banking as a service, which encompasses, loads of different things from sort of cards as a service, credit as a service, insurance as a service, compliance as a service, wallets as a service, all of these different areas. And I'd love to try and unpack some of that, what it means, perhaps here in South Africa, but also a slightly broader context, because I obviously know you guys and you work internationally. So really, how does the markets compare? What's going on? Or what are the trends you're seeing in other markets versus what's going on here in South Africa and the rest of Africa? I know you've got a big project at the moment in Kenya. So maybe we can talk a little bit about that. I don't know how much you're allowed to reveal, but if you can, then that would be great. Yeah. And just talking about the journey, because I think UKheshe as well has sort of grown and pivoted and is now something quite different to what it was a number of years ago. So I'd love to kind of unpack that as well. But let's start with you. Let's start with UKheshe. Tell us a bit about the history. How are you what you are now versus what you were, I don't know, a couple of years ago?
I think the UKheshe is a great story because, in reality is we only about 2 years old in our current form. We started as a CSI initiative, myself and my founders at a software development company. And we thought, well, let's build a competitor to FNB e-wallet. And that's really what the goal was. And we had a whole lot of late assets lying around from previous projects that we could leverage and integrations. And we very quickly launched this proposition to help car guards and security guards and petrol attendants, etc., to get paid. And it was this great little idea that really was a little sideline project for our core business, which was a software development company. That was a B2C proposition, and we had no idea what regulation was. We didn't even know there was something called a central bank. So it was, we were these gung-ho cowboys, and we just went out there and created a whole lot of noise, signed up hundreds of thousands of consumers, and we realized but why are we so good at this? Well, surely the banks could have done this years ago, but we failed to realize that there were requirements like KYC and PEP screening and all these fancy things that are required in the financial services space. So what was good, though, is we got the attention of the regulator because we were so successful so quickly, and they took us under their wing and really helped us transform our business into a compliant framework, because really what we were doing is driving financial inclusion. And I think that's still the ethos of our business in terms of driving financial inclusion. So that was the start. But I very quickly realized through these engagements that we had with the regulator, through the engagements that we then had with the banks that were mentoring us, and the engagements that we had with the big players like MasterCard and Visa, that our strength was actually this ability to execute and build this ecosystem. So I very quickly made the decision to say, well, this MVP that we did in the market in terms of dipping our toe into FinTech, as it was called, was a great idea, but I definitely didn't want to be a B2C company. So we managed to put a deal together where we exited our B2C business and refocused everybody in the organization. And when I say everybody, even our existing core business. So at that time, we must probably had 24 customers, 3 or 4 other companies that we had founded. And I literally came into my founders and I said, guys, we're stopping everything. We're sailing south. and we're now focusing on this B2B fintech business. And they said, well, do you know what you're going to do? And I said, no, not really, but I think we're going to do well. And that really was the play. And, as things then happened is MasterCard approached me and asked if I wanted to buy MasterPass. Well, actually, they approached me and said, do I know anybody who'd like to buy MasterPass? So I said, I'll buy it. So I had no idea how I was going to get the money. I had no idea even what it was worth or even what it did, to be quite honest. But I thought, what it's going to do is it's going to give me a strong footprint in this market, because the challenge being a fintech or any startup business is you have to have some kind of credibility, and it's very hard to do it from the ground up. It's a lot easier just to go and buy it. So, an organization like Altio had been in the market for 9 years. They'd been sitting in Standard Bank, had been sitting in MasterCard, great reputation with all the banks, with the mobile operators. So it was really a no-brainer until we had to get the money to pay for it. So that was quite interesting, because then I had to sit with my co-founders and say, guys, you're putting your houses as surety because we've just spent a few $1 million to buy this asset. And they all looked at me as if I was mad. But I eventually got them across the line, and they all signed surety, and all their wives were very stressed that they were going to lose their homes. But we managed to pay Nedbank back within, I think, 9 months. We paid that loan off. And the business has just gone from strength to strength. So it was really, we made some good, very risky decisions, and they paid off. And that's what being an entrepreneur is about, is make big, bold decisions and drive it, surround yourself with good people, and then, everything will fall into place. And I think that's where we are now. Now as you said, we're a very different business. We've grown significantly. We're now 150 people operating on 4 continents. We've just done a $40 million acquisition of a very large payments business across Africa. We're busy looking at another $50, $60 million acquisition in the Middle East at the moment. So our business has really changed dramatically over a very short period. So if I look at the businesses the business that we're looking at in Middle East at the moment has been around for 40 years. So we're going out there and we bold, and we're looking at assets, and we're looking at, well, how can we leverage those assets to scale our product? And really what that does is it's about, I'm buying customer relationships. So you're currently buying widget XYZ from this organization. We're just bringing a catalog of a whole lot of new stuff that you can buy from the group. And that's allowing us to scale really exponentially. I'm excited about the future. I think the downturn in this fintech space that everybody's seeing right now, the downturn in funding, is perfect timing. So I think we couldn't have asked for it better. So our view was, when we started our funding journey, was we want to get access to about $120 million, and we might be able to do 1 or 2 acquisitions. I think now with $120 million, we're probably going to do about 5 transactions, just because the valuations have become more realistic. The market, everything, the boil in the market has gone off, and I think we can buy assets at reasonable value. So I think there's going to be a huge opportunity to consolidate for us in the next 2 to 3 years. It's going to put a lot of pressure on us, because it's acquisitions isn't easy. It takes a lot out of the team. It takes a lot out of the management. But I do think we're well positioned. We've got a strong team, and I think that's where the growth's going to be. We see a lot of opportunity. We see fintech is here to stay. Embedded finance is here to stay. And I think you mentioned it, banking as a service. They're all acronyms. You've got a flavor of the month. But in the end, it's just financial services. How do we take a financial proposition to a consumer? How do we take it to a merchant? How do we take it to a small business? And that's really what it boils down to. You can call it whatever you want to. And I think the acronyms are just about what the PR companies and the marketing companies come with. But really what it's about is banks being able to grow. So if you look at our Kenyan opportunity right now, we've partnered with Diamond Trust Bank, which is a tier 2 bank in East Africa, operating in Uganda, Tanzania, Kenya. They're owned by HBL in Pakistan, so it's a significant bank. Now you take a bank like that and they say, well, how are they going to grow in such a competitive market? So they 40 bank licenses in that region. It's tough to grow a consumer base. So what they've decided to do is said, well, why don't we become the biggest tech company with a banking license? And how did they do that? They said, let's partner with UKheshe. And we go to the regulator and we say, well, we're starting a FinTech enablement ecosystem called Astra. And with Astra, the regulator knows that you can get card as a service, wallets as a service, payments as a service, KYC as a service. But there's a trusted, regulated bank that is operating this platform on the back end. And I think what's nice about Kenya is their regulators very proactive, very involved. So it really positions us exceptionally well now in this market, where we've actually formed a JV with a bank, and we will now replicate that model in West Africa, in Middle East, in Latin America, Southeast Asia, where the core fundamental is you always need compliance, you always need a bank, you always need, you need to protect the consumer or the business's money. So you got to avoid the bank. So rather partner with them. And we bring the strength to the table in terms of that we know about issuing, we know about acquiring, we know about wallets, and we've got an exceptionally strong team that builds user experience. So we can walk into an environment and say, well, those 200 fintechs that approached you as a Mr. Bank, we now have an ecosystem for them where we can guide them. And, we're even setting up an incubator in Kenya where we can actually welcome the fintechs to come and work in the office. We can train them about compliance. We can help them with their CBK submissions. We can help them with their technical integrations. And that's how you grow the business, is you have to start right at the bottom and you have to educate the people. And I think that's one of the things that we realized starting in that B2C space is we had Saab realize we were doing something good. They educated us and it made us a hell of a lot better. And I think it's really about us now giving back and saying, let's take the pain out of fintech. I was sitting with, I think, one of the card associations earlier this week, and they've got a backlog of, call it 200 projects in terms of fintech projects across Africa that they want to execute on. And the biggest problem is execution. So all these fintechs, they might be funded, they might not be funded, but they all can't execute. That's the biggest commonality, and that's one of the biggest reasons they failure to execute. And I think what we bring is that ability to execute. Take the money that you've raised from these venture capitalists, use that to grow your business, not spend it on tech and trying to figure out the compliance and spend on integrations. We've got it all already. We've done it all already. Get your MVP out, get into the market, optimize your solution, start fast, fail faster is what I always say. And I think that's what we enable the market to do is get your proposition out. Stop talking about it.
It's an incredible story, Clayton. There's a couple of things I just wanted to discuss in a little bit more detail. You've mentioned this twice now. So Saab obviously noticed you when you were doing your sort of QR codes on the car guards. You were able to sort of give them a tip. It's quite unusual for a central bank to kind of bring in an unlicensed service provider, and say, we actually want to work with you, get you licensed because we see this as a financial inclusion play. That's quite rare. And I suppose you wouldn't, I don't know, maybe you would, but advise other people who are looking at sort of different solutions to use that sort of strategy. It's quite risky, right? The central bank could come down and shut you down straight away. Is that a strategy you'd roll out again in other markets, or?
Definitely. I think even more so now. Knowing now what I know then is I think people fear the regulator for the wrong reasons. I think we've got the IFWG here in South Africa, which is a really proactive, a great unit. I actually had a call with them a couple of weeks ago again. They're really proactive in terms of wanting to work with you rather than against you. And in fact, the core is if your proposition is illegal, it's illegal. Stop doing it, because you're just going to you're going to spend a whole lot of investor money, and then eventually, you're going to get shut down. So rather do it properly and tweak your business model, tweak the proposition, so that you can go to market. So for us right now, what we're doing, we spoke about Mark, my colleague who runs Africa, and he's off to Ghana next week, and we're doing a big drive in West Africa. And our first port of call is the regulator. So it's, hello, we UKheshe, we're coming into your market. We don't want you to read an article about us. We here, we plan to do a lot. How can we work together?
Yeah, absolutely. Okay, great. And then the second point I wanted to just talk about is this so-called sort of downturn in the market. You've gone from sort of the QR codes to now spending a war chest of $120 million on sort of acquisitions. I mean, that's some journey. And you mentioned that the acquisitions are hard on sort of the management team and what have you. Is it the actual acquisition, or is it the integration thereafter that's actually the challenging bit?
It's the way you do the integration, and it's the way that people still have job security, and I think they feel like they're part of the transaction. So I think in this space, you're always going to deal with people, and you always need to make sure that you're inclusive with those people so that they feel like they're part of the journey. And it's not like, oh, we bought this business, work with them. So it's that acquisition process that you have to, because everybody, I think, isn't as risk averse as I am. So I take big risks, and so people look and they say, "But why the hell do you want to buy this asset?" And it's sort of you have to explain to them, and then they come along for the ride. And
Sure.
I think that's and then the integration piece is then the next pain, and because you've now got different cultures. So our strategy very much is keep the assets unintegrated in the initial phase. At a group level, focus on the synergies in terms of at a business development level, where can we sell together? Where can we leverage of technology? Where can we save costs? But keep the business identities separate. And then in time, look at where it makes sense to integrate totally. Because it's very hard to just integrate businesses and integrate cultures and integrate policies overnight. So for us, It's just very much about, it's almost finding distribution partners for our product, but buying them. So we've got more control of them.
Amazing. And then we mentioned DTB, Diamond Trust Bank in Kenya. And if we're talking slightly broader about other banks that are looking to make this or go on this digital transformation journey, it's not just about the tech, right? And it's not just about the product. No. I think what DTB have done amazingly well is create an entire new business. I mean, they've taken out two floors in their offices. They've revamped them, or they are going to revamp them. Auditoriums, co-working space, podcast rooms, TikTok rooms, or something Jamie was saying. So that they've really gone full pelt on this. And I think maybe you agree or disagree, but it is more than tech. It's more than just offering a tech solution to the market.
It's actually not tech at all.
Right.
It's not tech at all. And I had this discussion actually with Jamie the other day, and I said the tech was the easy piece. It's I mean, from an UKheshe point of view, I'd love to say it's the difficult piece, and we've got this unique platform, and nobody can do it, but it's not. The reality is, the tech is the easy piece. The transformation of the people, the transformation of the market, the getting the adoption, that's the long, hard yards. Getting an MVP out there, getting a proposition out there, launching a payment type, launching a acquiring link, plugging in a card, it's heavy lifting. It's not impossible. I think what UKheshe do well is we do it quickly. So instead of having a 2-year project, it's a 6-month project. So therefore, we shorten the time to money, and we allow our customers to get to market quicker. But our core focus, and that's what we're going to be doing in Kenya, is we're going to invest heavily with our partner DTB to ensure that the proposition is successful. And and that proposition is about creating this incubation hub. It's about driving adoption. It's about educating the market. Tech. I've always been, I've been in tech for 30 years. I've never seen a piece of software that I can't copy.
No, absolutely. If I, again, sort of wind the clock back 6, 7, 8 years ago, speaking at events, I think meeting you for the first time at one of the events, I can't remember when it was, there was this whole talk about fintegration, fintechs versus the banks and banks versus the fintechs, and they're going to come together, and are they not going to come together, and they competing, the fintechs eating the bank's pie, and the bank's going to be really restrictive in terms of opening that up. Clearly, in some markets or some banks, perhaps, that's not the case. I mean, they've embraced the world of sort of, as you said, DTB moving from a bank to being a tech company. Are you seeing that in other markets? Is that very much a Kenyan thing? Are you seeing that sort of here in South Africa, where there are obviously some incumbent banks here that are Are you seeing that they're now starting to open up and have these conversations? Is it different trends you mentioned Europe, you mentioned the US, or Latin America and Asia? Is there any similarities, or is it bank dependent?
I think it's generally what we're finding from our experience across the globe is that the tier 2 and tier 3 banks that are very aggressive and are very keen to leverage partnerships to scale, because they don't necessarily have the balance sheet, they don't necessarily have the depth of skill inside of the organization. And that's what the FinTech partnership brings them, is that it almost brings them this outsourced innovation center that they now can bring into their organization and help them compete against the tier 1 banks. The tier 1 banks have infinite amounts of money, infinite egos, so the tier 1 banks are always going to have this not invented here syndrome. We can do it better. We don't care that it takes us 20 years because we've got this critical mass. So you're always going to have the situation that the tier 1 banks are going to push against FinTech and say, well, and if they like a FinTech, they go out and buy it. That's their strategy. So you see it in a lot of markets. It's sort of, well, we want to play in the FinTech space. Let's go and buy that FinTech. And I think they've missed the point totally. And there are a couple of great case studies in South Africa that I won't mention, where they just kill the entire FinTech by buying it and incorporating it into the bank. The decision-making is slowed. The innovation is slowed. The ability to execute is slowed. It's just, they've missed the entire point of the partnership. And it's just because they were greedy around they're wanting all the revenue and all the recognition inside of the banking organization. Whereas I really think, from my experience, we have great banking partnerships across the board. And in South Africa, I think we have all the banks as customers. I think bar one. So we have great relationships with them, and we add value. And in some, we add a whole lot of value, and in others, they really just use us, as a Swiss Army knife for a specific proposition where they need help. And
Sure.
And I think we're unique in that space. And I think our strategy in terms of being a far broader capabilities business, in terms of we're not just a wallet business, we're not just an acquiring node business, we're not just a card business. We've now set up what we call UKheshe Labs, which one of my co-founders is heading up, Jason Penton. And that's for us to continually drive innovation. So when the card associations come up with a new technology, we can integrate that and offer it to the banks immediately and say, guys, here's a new tokenization play. We've got it ready. You can adopt it. So we want to keep stimulating that innovation. And I think the key is for a business like ours is never to lose it. Because I think it's very easy when you start growing, you can lose that innovation.
And then when you're acquiring businesses that probably also innovate as well, is it quite difficult? Again, we spoke about that sort of integration of people, processes, technology, but sort of ideas as well. Because you're buying different businesses with strengths in different core areas to perhaps what the core business does as UKheshe. How do you stimulate and how do you keep going with innovation when you've got lots of different ideas? Is that a really good problem to have?
Scott, could you design a video game?
I could make you a hypothetical one. If I took some random genres, mechanics, maybe blended them together, and created a new hypothetical game.
Now that would make a great podcast.
Undoubtedly.
So what would you make? Something original and exciting? A Dark Souls city builder? A co-op roguelike?
Everything. All of that. We could use the Nemesis system and put it in a first-person shooter. And we could have a loot system with survival mechanics and motion controls. And maybe you could... I don't know, save a kingdom from some out-of-control toasters. What about party?
Catch the Gaming Blender on all your favourite podcast platforms.
That's a great problem to have. It's a great. I think that's what great businesses are built upon. And I think you want lots of people with lots of ideas, throwing it on the table. What are we going to do? And I think that's what we look at when we look at acquisitions. Number one is, what is the culture? We walked away from a few deals where just there is a culture mismatch. We just I'm not going to sit across the table from the CEO. We're not going to be able to have a beer together. We're not going to make a joke. It's just, there is a mismatch with different businesses. It has to be the same energy, the same And I think the core fundamental in terms of, if you look at the transaction that we've just done, we both want to drive financial inclusion. We both want to do better in Africa. We both want to enable markets. We want to enable the consumer, the merchant, etc. So there's a fundamental grounding that brings us together in terms of what do we want to achieve. Then, by the way, we do fintech. We could have been in manufacturing, but we aligned, culturally.
Let's just touch on financial inclusion, because obviously it's a massive part of your business. What drives fintech in emerging markets? I'm often asked from colleagues in Europe, what's the difference between fintech in Europe versus fintech in Africa? Well, fintech in Europe is kind of a luxury item, really. It's convenience, but fintech in emerging markets, specifically in Africa, this enables people to live, quite frankly. I mean, strip everything away. Yeah. How does a fintech enabler like UKheshe really drive financial inclusion? What are the tangible outputs you can tell your prospective customers, or you can tell regulators, because obviously that's a big part of what regulators are looking at now, as you said, from the very early days of the QR codes, and they saw that as being a product that could be used for financial inclusion. As the business has now grown massively and is pivoted in lots of different ways and is now a very different proposition, how are you solving, if that's the correct word, financial inclusion?
Yeah, I think two great case studies are what we've just done in Zambia with Digital Paygo, and what we're doing in Kenya with Infinity. Again, that's a DTB proposition, but it's DTB being their own customer on their own platform now, where it's really about, if we look at Africa as a play, and Africa is very similar to Latin America, very similar to MENA, very similar to Southeast Asia. These emerging markets all have a very common trend, a very large small business market, SMMEs. Look at South Africa in terms of how many SMMEs there are. I think I saw a report that there's something like 5 million SMEs in South Africa, and I think there's 40 million in Nigeria, as an example. I think there's 10 or 12 million in Kenya. And it's what tools do we give that SME for him to empower him on a financial journey? Because he employs people, he sells goods, he needs to accept money, he needs to apply for loans, he needs to buy goods. So it's about creating an ecosystem for SMEs to transact and bring them into the formal economies. Because in the emerging markets, that if informal economy is still 80+% cash. So cash is the common enemy. There is no, everybody how do we get cash out the system? Because we want to reduce the amount of cash in the system. So it's what tools can we put in place that remove the cash but still add value to the people using the tools? And that's about getting them access to capital. So I think in these emerging markets, these small businesses need capital. You can't get capital if we can't see what your track record is. We can't, so it's driving acceptance. It's driving financial literacy. It's giving them the tools to understand, simple accounting tools in terms of how much did I sell? How much did I buy? Did I make a profit? And those are the kind of things that we wrapping around our core product. So yes, there's a payment, but to get to a payment, you need to actually deliver a whole lot of value wrapped around that.
And you mentioned again earlier on that you've got a team that's focused on sort of the customer experience side, or the UI, the UX side as well. Clearly, that product has to be quite different for different markets and different demographics. Looking at maybe an SME here in South Africa versus an SSME in Nigeria, for example, who may not have the same degree of financial literacy. So the app or the user interface needs to be quite different. So it's not a cookie cutter approach. It's not one size fits all. It's very much sort of custom built for each market or each client and their segment of customer, or is that how it works?
Very much so. So very much so. So effectively we have building blocks, and then putting those building blocks into a framework that makes sense in that market. And what we've learned as well is, out of the experience in Zambia, we actually we put too much in the proposition. So we've actually taken a lot of functionality out because it was too much for the end user to consume in terms of, and that's why I'm not a big believer in the super app strategy that a lot of people are pushing out there. is they're complex and they're difficult to use, whereas the consumer or the small business actually has a requirement to do very simple things. So, by giving them too much, it almost is a deterrent for them to adopt it.
But you have the technology in place, and because it's API first, you have the technology in place to enable different parts of that platform to do different things in different markets or for different consumers or for different customers.
Yeah.
That's how it's built, right?
Exactly.
Yeah.
So we can enable the functionality, down the road as people get more and more educated, and as they then ask for it, instead of just forcing it down their throat. You basically, go on a journey with the end user.
Amazing. Well, it sounds like a fascinating journey. What's next? Obviously, you're on the shopping hunt for a few different companies, which is super exciting. Where's the next year going to take you outside of these acquisitions? What's your sort of strategy in terms of markets and different products?
I think my partners and I say, our strategy is to be a gorilla. So we're going to go out there and we're going to dominate. We're going to be a big, aggressive player in the market. We're not going to go silently into the night. So I think we're going to be aggressive in the market. We're going to make our presence known in the markets that we operate, and we want to dominate in those markets. So I think for now we've got a very strong position in Africa, and we're going to build on that. My goal this year is to really get a dominant position in Middle East, and I can only do that by acquisition. So I can't go do a grassroots build in that market. So I need to find the right acquisition in that market, and we are looking at a few right now, which will get us into that market as a processor, as a player with banking relationships, etc., and then grow. And I think if I can achieve that in the next year, we've done very well. The bonus will be if my team in Tampa can actually deliver some deals in Latin America. We expanded into that market last year, so we're starting to do our first. I think we were bidding for a deal in Costa Rica. So I'm excited about that market, but for now the focus is Africa, Middle East, and then everything else is going to be opportunistic. So I think maybe something comes off in Southeast Asia, maybe something comes off in Latin America. But for now, Middle East and Africa is the focus.
Cool. Clayton, where can people sort of follow the journey? You sort of more active on LinkedIn or Twitter or, dare I say, TikTok? Or where can people follow the UKheshe journey?
Yeah, we've got a very active LinkedIn presence, I would say. So I'm very active myself on LinkedIn, and my team is very active on LinkedIn. So I think that's the best place to follow the UKheshe journey and reach out to us. As you know, we're always hiring. We're looking for great people. We only want the best people, and I think reach out to us. We're keen to hear from everybody.
Amazing. Clayton, listen, thanks so much. Best of luck for the year. We'll be following your journey. That's doesn't need saying, but thanks again for your time. Really enjoyed the conversation.
Excellent.
And that's a wrap for this week's episode of Talking Success. Thank you so much for tuning in and joining us for this fascinating discussion on all things FinTech. We hope you've enjoyed this episode and have gained some valuable insights into the ever-evolving world of finance and technology. A huge thank you to our guests for sharing their expertise and providing us with some amazing insights. We certainly couldn't have done this without them. Don't forget to subscribe to our podcast and stay tuned for more exciting conversations with experts in the field. Until next time, keep learning, keep growing, and keep talking success.